Hey everybody, morning, Missouri, good evening. It's the 5th of December 2018, coming at you 2 nights in a row. Wouldn't have produced a video for you tonight if I didn't see Dow futures pointing to an over 300 point decline at the open tomorrow. So I wanted to get in front of that for you. May not have a chance to offer commentary first thing tomorrow, so wanted to kind of share my thoughts about what's going on. This is that 800 point decline that we experienced on Tuesday. Did that video because of that last night, but wanted to take a look at that on this chart. This is the Dow chart. Yesterday we looked at the S&P. This is one I created for you back here during the second 10+% correction this year. Drew some lines, talked about this technical indicator here on balance volume, told you why when we bounced here that we shouldn't believe it, told you why when we bounced here it was beginning to look believable. Then we had some unfortunate trade rhetoric out of the White House here, and that pretty much killed that rally or that attempt to get back to an all-time high. Found some support there. When we were here, I did a video, the last one, I drew this circle and said, looks like to me we could easily test this support line. And this was the distance we had to go. Didn't quite get there. Bounced on good trade news. It was optimism leading up to the G20 summit where President Xi and President Trump were to meet. This gap was after the summit. They did call a truce for 90 days pending negotiation. Then the president decided to tweet some details that didn't turn out quite to be the details that apparently both sides agreed to. In fact, as recently as today, White House officials said, no, we don't have a deal on tariffs on cars like the president suggested on Twitter a night or two ago. So that has something to do for sure with this decline. In fact, at one point after China did confirm that, as the president said, that they're going to begin immediately buying ag products and also liquefied natural gas from the U.S., that was good news. Dow was up nicely in the futures market. Triple digits showed a very nice potential for an open. Then the car tariff not being there, or the car tariff news not being there, but worse than that, news out of Canada that at the behest of U.S. authorities, they arrested the CFO of a very large Chinese technology firm for allegedly doing business with Iran in the face of U.S. sanctions. So I know nothing about the arrest. I know nothing about the allegations. All I know is the timing could not have been worse, as you might imagine, amid the beginning of some serious talks on this trade dispute between the U.S. and China that not only has played havoc in the market, but is beginning to play serious havoc in global economic conditions. And that includes the U.S. Today's Beige Book came out as a quarterly assessment of the economies of the 12 Fed districts, and 11 of those made no bones about it. These tariffs are becoming very problematic. And if we don't come to some resolution, we've got huge concerns, business-wise, economic-wise, et cetera, in the U.S. going forward. I think the White House is getting that message, and I think that's why we're getting close to at least some resolution. Right now, there will not be the escalation in tariffs on January 1 as previously scheduled. And the president keeps saying that he thinks we can make a deal. Again, this arrest just really throws a wrench in that because the Chinese are livid this evening. Asian markets, of course, have rolled over. Currencies are showing a great deal of strain where you would expect even before the Dow began to roll over in the futures market. So, folks, what do we do with all this? What do we do with all this volatility? Well, frankly, it depends on who we are. If I was a short-term trader making decisions intraday on the market, I actually would have been bullish going into tomorrow before that headline, particularly the one on the arrest. This was not a big volume day. This looked more like a buyer strike than it did a seller's panic. Now, it wasn't capitulation. Some people will say, you got to have this big washout on huge volume before we're really going to take off again. Well, I've seen that, and I don't disagree with that. In this environment, I think the market really wants to move higher, and I think there's a lot of cash on the sidelines that could make that happen. So I anticipated that we'd wake up tomorrow and get a really nice bounce, and that's what I would have played as a trader. until I saw this headline tonight and I saw currencies in particular begin to roll over. In that event, I would be a seller in the morning. I would go short and I would play this downdraft and be prepared to reverse that position in a hurry if we got some good news. Because again, I'll say it again, I think this market wants to go higher, but I think it's going to take some really good news on the China-US trade relationships before that really happens in a meaningful way and before we get back up here to all-time highs. Now, I'm not a short-term trader on behalf of clients, certainly not. And so we have to talk about what would an investor do? Someone who is methodical, someone who has a basis for making long-term investment decisions. This is either an opportunity to buy based on current macro conditions, or it's the kind of market where you stay the course with a relatively growthy global sector allocation until the weight of the evidence changes, and then you begin changing to a more defensive posture. We're not there yet. So investors who know what they're doing have to ride through this stuff. They actually have to be willing to get defensive at maybe even a lower level if that's when things roll over. But they don't do it based on volatility. They don't do it based on volatility, which today is still within the context of an ongoing bull market. They do it based on general conditions rolling over, and we're just not there at this juncture. So folks, I wanted to come in, help you once again, put it all into perspective. If tonight's news does not get remedied very soon, I certainly think we will test these levels, which is quite a ways lower than here. If we don't get to some resolution, we don't get a nice bounce here, which we should anticipate under normal conditions, then we're looking at other levels of support. And I will keep you abreast of macro conditions and what we're doing within client portfolios. And right now we are not getting defensive as macro conditions tell us not to just yet. Thank you, folks, as always, for watching and listening. I'll be back soon. Take care.